this video, I'm going to share with you 7 trading tips to trading the Dow Jones and the Nasdaq, or the US30 and the US100 in the New York session. The trading angel style of trading is very holistic. So my 2 strategies are a combination of both technical analysis and fundamental analysis. And I strongly believe that mindset and risk management are just as important as strategy. So I'm going to include something from each of those categories to give you as balanced a view as possible. And the tips are also going to cover the preparation, so before the trade is placed, during the session, so when you're actively looking for a trade or a trade is open, and also afterwards whilst you're reviewing the trade. So I'm going to be giving you as good a cross-section of guidance as possible. There's going to be a bonus tip at the end of this video for those of you who are hardcore and have made it all the way to the end. It's going to be a profit trick, which is going to be particularly useful for those of you who are trying to hit your 10% target on your prop firm challenge. So if you're excited to learn, make sure you hit the thumbs up button before we get started. It's good for the YouTube algorithm and means that I can continue to create this content for you. And just quickly, before we get into the tips, I'd like to say a huge thank you to the sponsor of this video, which is XTB. XTB is a well-known online investment and trading platform that offers stock, ETF, Forex, and CFD trading and investing services. XTB is one of the largest stock exchange listed Forex and CFD brokers in the world, and they provide retail traders with access to over 2,100 instruments in global markets. They are regulated by the Financial Conduct Authority and are authorized by some of the world's largest supervision authorities. XTB has also received numerous awards, including Broker of the Year 2024 by InvestCuffs. So if you are in the market for a new broker, then why don't you head over to the XTB website and see if this might be the broker for you. If you are newer to trading, then you can try it out on a demo account first. What I think is really cool about the XTB website is they've got lots of educational content for you. So for example, you can go up here to the education tab, select market analysis, and then you've got loads of different news releases which you can have a read about before the market opens to give you an idea of sentiment. And if you go back to the education tab and select educational articles, you can actually select from the different categories. So for example, if you are an indices trader like me, you can click on indices and then you've got all the relating articles here. So I think this is really helpful for new and experienced traders. And if you are looking for a new broker, then make sure you head over to the XTB website now and see if this is the one for you. So this video is going to be for existing traders of the US indices, so the US30 and the Nasdaq. And it's also going to be for traders of the New York session. This video isn't designed for brand new traders, as I have included a lot of assumed knowledge. However, I have had a lot of messages recently from complete beginner traders. So I have actually decided that my next video is going to be on all of the basics if you are a complete beginner. So my best advice would be, if you are a brand new trader, this video isn't made for you and you might find it a tiny bit advanced for you. However, if you subscribe to my channel and hit the bell button, then you will be notified when my next video is released, and then you can watch that to get you up to speed and always come back to this video at a later stage. This video is also not going to be for anyone who thinks that trading is a way to get rich quick. Again, this is a message that I've been getting a lot recently, and I just wanted to clear it up that trading is not quick, it's not easy. It is a long process to make progress in trading, and I think that it's really important to come at it with the right mindset and the right expectations so that you're not disappointed. I really hope that all of the tips in this video are going to really help to elevate your trading, but they're all designed to be things which you can implement and learn and progress on over time, rather than things that are going to make you rich overnight. So my first tip for trading the US30 and the US100 is to check the earnings reports each day. So one thing that I think is really cool about trading these markets is that it's very clear what makes them up. So the US30 is made up of the 30 top companies in the US. And I actually encourage the traders that I coach to memorize those 30 companies so that it's very easy for them to see quickly and easily when they do show up on the earnings reports, and also when they show up in the news. If you have them memorized, then it's going to be very obvious if you see a news release out which includes one of those companies and could perhaps be perceived either positively or negatively. But also when you want to check the earnings reports calendar, then it's very easy to spot when one of those companies is up if you are really familiar with them. I haven't memorized the 100 companies on the US 100 because I get that that's a little bit more difficult, but I do actually have them printed out at my desk so I can see them at a glance. And now I'm going to show you how I check the earnings reports. So this is where I check the reports, and you can select the category either yesterday, today, tomorrow, this week, or next week. They're all quite useful categories, to be honest. So if a report came out yesterday which had a very high earning on one of the US 30 companies, you perhaps might see a little bit of a move in the London session, which isn't actually typical. But sometimes you do get that if you have had a high earner or a particularly low earner. Today is obviously useful because you can check this before the market even opens. So I include this as part of my pre-market checklist to give me an idea of the market sentiment before the markets open. I spend the first half hour before the markets open trying to establish a directional bias and seeing if any of the companies in the US 30 or the US 100 are included in this, and if they've had particularly good earnings or particularly negative earnings can also help to make a big difference. I don't know if you've noticed, if you have been trading these two markets for a while, you might have noticed that some days they move in a similar direction and other days they move in the complete opposite directions. When you get really comfortable with the companies that make up these markets, and when their earnings are released, then that can actually help to eliminate a lot of the confusion around why one might be moving and the other isn't. When you're analyzing these ones, you want to be looking at the surprise percentage. So anything over 3% is considered good or under 3% is considered bad. However, I don't actually find that you get too big a move or too noticeable a move unless it's really in the double figures. You also have the sunshine and the moon. So this is before the market opens and this is after the market closes. To be completely honest, I find it a little bit more interesting when it's before the market opens, because then this can be included in my pre-market check and can help me to establish my directional bias. Whereas often when it's after the market closes, I've stopped trading for the day already or I'm asleep. So this one isn't that interesting. But if you do have a particularly high earner after the market closes, as I said, you might sometimes see a bit of a move in the London session. My second tip is to check the news releases during the session. So again, this is something else that I teach the traders that I coach, is that when you are approaching each trading day, you want to think of it uniquely. So obviously there will be some things which are the same, which you do every day. So obviously the strategy, the rules, these will be the same, they're kind of fixed. But the news releases and what is coming out during the session is going to be different and unique to each day. So you have to approach each trading day with some things that are fixed, but also some elements which are unique. And the news releases which are released during the session will be one of the things that will make each day unique. So for example, there are often a lot of news releases which come out at 1:30, which is an hour before the market opens. This is UK time, by the way, because I live in the UK. So the New York session opens at 2:30 in the afternoon in the UK. And a lot of the news embargoes will come out at 1:30, so an hour before the market opens. If you're in New York, the market will open at 9:30 a.m. and the news embargoes will come out at 8:30 a.m. This one's quite useful because it's before the market opens. So you've got a whole hour to analyze how the market responded to that news release. Then you also get news that comes out during the session. And for example, sometimes you might get something that's coming out at 2:45 and then again at 3 p.m. And on this day, you're going to trade that session completely differently to how you're going to trade when the news only comes out at 1:30 before the markets open. So for example, if you get your perfect setup, technical analysis setup, and it aligns at 2:44 and there's a high impact news release which comes out at 2:45, you're not going to want to get into a trade 1 minute before that. However, if it's 2:31, for example, then you can weigh up the balance of probability that you may be able to get your take profit hit, or the trade may have been able to move enough into profit for you to move it to break even before 2:45. So you want to weigh up those things. So checking the news releases which are due out during the session will help to guide you as to how you're going to be trading. Often it can actually be easier to place a trade after 3 o'clock because the market does tend to settle a little bit. If there's really high sentiment for a certain direction, then usually you will see that coming out early on in the session. But also, if there isn't, it might come out a little bit later. So each day is quite unique, and news releases do play a big role in that. My third tip is to check for sentiment. So this one is checking how the week opened, if there was a gap up or a gap down, and also to check the opening candle of the session. So this was a tip that I learned from an institutional trader. He said that the big market makers, so the big traders who can actually make an impact on how the market moves, they cannot buy all of their inventory or sell all of their inventory in one go. They've got to do it in stages. But if they are feeling very, very bullish or very, very bearish on a particular market, then they will go straight in as much as they can at the very beginning. So when the week opens, and also when the market opens at 2:30. So you might see a bit of a gap up when the market goes from Friday to Sunday, and that will show you that there is some bullish sentiment. It doesn't necessarily mean that the market's going to go up and up and up forever, because what you'll often find is if there is a gap up, that gap often actually gets filled, but it may give you a clue as to how the week will close. So if you get a gap up at the beginning of the week, it may get filled, that gap might get filled, but the week may end further up because the traders who got in early and were very keen to buy at the very start will then have to stage the rest of their buys throughout the week. And you may find that the market does progress further up during the week. Similar to the opening candle, a lot of traders do what's called buy on open. So if they don't know when they want to buy, they will just buy on the open. So often that opening candle can give you an idea of sentiment. So if you see a big bullish candle on the open, doesn't mean it's going to go up and up and up forever after that. In fact, you might get a bearish candle following it, and then a bullish one, and then a bearish one. That very frequently happens on the open. But you still want to use that first candle as a gauge of sentiment, because that might tell you how the day will close. Obviously, that is not all of the time, so do not use that as a hard and fast rule that if the market opens with a bullish candle, it's definitely going to end bullish. But you can add that into your toolbox. You can check that along with the gap up or gap down at the beginning of the week. You can see if they're in alignment, and then you can see if all of this matches up to the rest of your analysis. My fourth tip is to check daily momentum. So when I'm trading on very small time frames. I'm actually trading on the 1 minute time frame, and sometimes I use the 5 minute time frame as well. However, most of my technical analysis before the market's even open is actually done on the day chart. And this helps to give me a bigger picture, because obviously when you're stuck on the small time frames, you're just seeing this very narrow view, and it can be easy to get sucked into thinking that what you're seeing is the big picture. When you zoom out and you go onto a higher time frame, then often you can see something completely different, and often the trends look a lot clearer. Or also, if you're just clustering and going sideways, that can also be a lot clearer as well. So I'm going to show you on the charts now how I use daily momentum. So this is obviously the 1 minute chart. So this is how I would place a trade on the 1 minute chart. I like using the 1 minute chart because these markets move so quickly. So it can help to just give you a really precise entry. However, if you go to the day chart, this can give you a much better idea of the big picture. For example, if you look on the day chart, you can quite easily see we're in a long-term uptrend. I like to use Heikin Ashi as my momentum tool. So if you go to the different types of candle, then Heikin Ashi is down here. I star it because I use it all the time. And what's cool about this as a momentum tool is that there's only really 3 main momentum candle types. There's bullish momentum, bearish momentum, and indecision. And this can just really help to eliminate some of the noise, because it can give you a very clear idea as to whether you do have long-term bullish momentum or long-term bearish momentum, or even if the market's just clustering. When the market's going sideways like this, you see when it's going sideways like this with indecisive momentum for weeks, actually it's very, very difficult to get a trade in those periods. Whereas when it's going up with steep bullish momentum, it's a lot easier to get a trade. So when you get an idea of what the momentum is like on the day chart, it can really help your trading in the short term. And that is a really nice segue onto my fifth tip, which is don't trade every day and set a maximum number of trades. And the reason why I say don't trade every day is because sometimes you will see on the day chart, as I've just shown you, that sometimes for weeks on end, you do not have a good opportunity to trade. If the market's clustering, being indecisive, and not really going anywhere, it's very, very difficult to get a good trade. It's very difficult for traders to make their peace with the fact that not every day is going to be a good trading day, because often traders, and especially when they're newer to this, they will turn up, they will do all of the prep, and they'll be ready to make a trade, and there's just no opportunity. And sometimes there are no opportunities for weeks. And actually the best thing you can do is to be patient and to sit out and to wait for the opportunity to come to you rather than to force a trade that isn't there. So I say set a maximum number of trades to stop you from over trading and from trading away any wins that you were making when the market was trending. So my maximum is 3 a day on each market. Now, I know that's actually quite a lot for some traders. Some traders will actually say 1 or 2 is their maximum for the whole day. Mine's 3 just because I've noticed that sometimes I do get a really good opportunity on the third go. Also, I've got 2 strategies and they work slightly differently. So the second strategy does kind of allow me to get a trade a little bit later on in the session, and therefore I still have that as an option open for myself. But what you often find on markets like the US30 is that sometimes they move with such fast momentum during the session, and it's so easy and quick to get a good trade. But other times it just goes up and down, and it will go sideways, up and down for hours. And you look back at the session and you realize there was nothing that you could have possibly got out of that market. I'm actually going to show you a really good example of this. So we're back on the US30. I'm going to go to normal candlesticks and I'm going to go to the 1 minute chart. So this would be a good example of when it was fairly straightforward to trade. I mean, there was a big spike here, which admittedly is difficult to trade in, but can you see that there was a big opportunity here when the market did move up quite smoothly? However, if you go back to the previous day, can you see how the market just went up and down, up and down? This is virtually impossible to trade in. And if you'd placed 10 trades, for example, in this section, you would have probably lost about 500 pips. If your stop loss was at 50 pips, for example, it would have almost definitely hit your stop loss every time. When you look back at it, you can see quite clearly there wasn't a good opportunity at all in the whole day. Whereas if you'd waited until the next day, you would have seen that there was actually quite a nice opportunity. Let's just have a look at that. That was over 300 pips that you could have got trading the next day if you'd have waited. So it's really important not to force trades that aren't there. And one of the ways that you can do that is to set yourself a maximum, because sometimes it's quite difficult to see that when you're actually in it. My 6th tip for trading the US30 and the US100 is to avoid the New York lunchtime. So when I'm trading, I split the New York session up in my head into different sections. So there's the section before the market's even open, there's the section after it opens, there's New York lunch, and then there's the evening section. So you can often get quite a nice trade in that first section when the market opens. Sometimes it's a little bit chaotic, sometimes it moves straight into profit. Each day is going to be different, but at some point during that first section, in the first couple of hours, you can usually get a nice move. Then you often notice that the market will start clustering, going sideways. The candles will be very small and they won't really be going anywhere. That's often during the New York lunchtime. So in the UK, this is around 4:30, 5 o'clock, 5:30, that sort of time in the afternoon. So if I notice that it's particularly difficult to get into a trade and the market's not really going anywhere, I will look at the time. And if it's around 4:30, 5 o'clock, 5:30, then maybe I'm stuck in the New York lunchtime section, and I will often stop trying to get into a trade and actually wait for momentum to pick up. You never know if the market's going to do a sudden reversal in the evening or whether it's going to continue in the direction it was before lunchtime. So often it's a good idea to just reevaluate where you're at that point. And my seventh tip is the one that no one asked for and nobody wants to hear, and that is to accept that trading profits are inconsistent. I really wanted to include this one because I'm hearing a lot of people getting upset about the inconsistency. And I think that that's actually affecting the way that they trade. And as I mentioned at the beginning of this video, I strongly believe that mindset is just as important as strategy. And if you come at trading with the right mindset and you focus on trading well rather than making money, you're much more likely to actually make money, because making money is a natural side effect of trading well. But it's so difficult to trade well if you're just focused on the money side of it. And if you accept that trading profits are inconsistent, it's going to be a lot easier for you to stop focusing on the money and start focusing on trading well. Now, what I mean by trading profits are inconsistent is that often when people come to trading as a brand new trader, they are coming from a job which pays them a yearly salary, and they can break that down into how much they're getting each month or each week and even each hour for how much work, so how many hours they have to put in and how much money they're getting out afterwards from it. Trading is not like that at all. You can put in a lot of hours and you can actually lose more money. You can work all day and not get paid anything at all. So you really have to accept that trading profits are inconsistent if you want to be a profitable trader. I'm always getting asked, how much can you make from trading? What's typical? What can I expect? Everyone wants to know what's the average. And there really isn't an average. If you think about it this way, say you're on a £50,000 account, a profitable trader can be making anything from 1% to 10% in a month, and a 1% month is going to be £500 and a 10% month is going to be 5,000. The difference in those two amounts, if that is how much you're making in a month, is so huge, because most people can live off £5,000 in a month, but most people can't live off 500 or even 1,000 at the moment with inflation, even 2,000 really. So, I mean, it's obviously going to vary depending on where you live and what your outgoings are. But the difference between a £500 month and a £5,000 month is enormous. So expecting that you can quit your job straight away or within the first couple of years and be earning a set amount every single month or the same amount every month isn't realistic. And as you saw on the charts when I showed you, there are times when the market goes sideways in an indecisive cluster, sometimes for a month at a time. And a good trader would know not to force any trade. So a good trader would come out of that month probably at 0%, whereas a bad trader would have traded the whole month and lost money because they wouldn't have been able to identify that that was a time when they needed to actually stay out of the market. So sometimes trading well means not trading at all. There's going to be months when the market doesn't give you anything, and that's not your fault. That doesn't make you a bad trader. It's just how it works. But there are also going to be months when the market moves in a really steep uptrend or a downtrend, and it's a really good opportunity to trade more because it's a lot easier. So part of your job is to identify which section you're in and to act according to that. So well done for making it to the end of this video. As promised, I am going to share with you a bonus tip, which is to compound your earnings in trending markets by leaving 10% open risk-free. So this is a nice little segue on from the seventh tip, which was to accept that trading profits are inconsistent and to try and identify when it's a good opportunity to be trading and when it's a good opportunity to sit out. When it is a good opportunity to trade, when the markets are in strong trending markets, you can actually do this little trick, which is to leave a little bit of your trade open so that it can compound over time. What I mean by that is if I see that the market's in a really strong uptrend, I will often try and open a few positions and I will leave 10% open with my stop loss at break even. The market will keep coming up and down over the course of the day, and I'm just going to leave those 10% open. Sometimes they will come down and they will hit at break even, which means that all I've really lost effectively is that extra 10% that I could have closed when I closed the other 90%, but instead I took nothing. Or what will happen is that a few of those will actually stay open if you manage to get a good price on them, and over time they will start to compound. This is particularly powerful if you are in a prop firm challenge and you're trying to reach your 10% target, which can be quite difficult for newer traders. And also sometimes I think psychologically it can be quite difficult to hit that 10%, because sometimes, well, I've seen this with a lot of traders, is they get to around 8 or 9% and then their psychology kicks in and they try and overtrade, or they try to force trades that aren't there. They try to open too big a position. They end up losing that money. So if you're leaving little bits of trades open which haven't yet got hit and you are in a trending market, you'll find that your profit does keep adding up even when you're not actively trading. And this can actually help you to get to that 10% quicker. Just make sure that you do check the T's and C's, because all prop firms are different and some are going to charge you a lot for holding overnight or for holding over the weekend. So you just want to double check that you're not getting penalized for doing that. And again, I just want to say a massive thank you to the sponsors of this video, which is XTB, and a little reminder that if you are in the market for a new broker, then head over to the XTB website and see if this is the broker for you.